Copart CPRT 42 cents in line with the estimate, 1.2 billion in revenue versus the 1.24 consensus estimate.
What am I missing here now? 1, 2, 3, 4. Is there anything else here? What's up, everybody? What are the odds we could get a webinar to function in one piece? Somebody throw some lines out there, some odds. There's about a 3-hour delay, so I'll give you guys a half hour to think about it. Hold on a second. What was I looking for now? So easily sidetracked. Oh, I know what I'm looking for. Is this it? What's the date on this? 5/16. That's not what I wanted. That's good for now. If I need anything else, I'll blow this out a little. Okay. All right. 100% Mario. If Mario doesn't have much confidence, it's a lost cause. If Mario has no confidence, we're finished. All right, let me mute everything over here. Hold your horses. All right. How's everybody doing? Good? So everybody, I take sees the screen and you can hear my voice okay? Mario, we're good for now? You would tell me, right? I got my ginger ale. All right, quick earnings check. I think a few big ones. Let me get some of these things off of here. All right. Deck. I think they're down off earnings. Wow. And you got a pretty decent buyback there too, right? I thought I heard. So where's that? Back down here. Huh, interesting. They might buy this back down to that range. Intuit. Wow, that's a nice pop in Intuit over 720 there. Is that new highs? That's new highs. No, not many people talk about this name. A strong stock. And Workday, I think, right? Workday's down a bit. So it's kind of mixed earnings wise. All right, market today kind of sloppy, and we'll dive right into it now. Again, we don't want to make too much out of every tick, every daily move, and you see a lot of people on social media try to handicap every move of this market, and especially now the market we've been in with Trump at the helm, and geopolitically, there's something new every day. You really want to try to get away from the noise as much as possible. In general, you want to do that, but especially when you got as much noise as we have these days. Just simply put, if you remember the last time we spoke, we had this rip, right, coming off a really nice setup as far as the lows are concerned. Okay. You really had nobody, no fund exposure, no nothing coming off that low. Systematic funds that really don't put much emotion or thought process behind their buying and selling. They're strictly trend followers and working off levels and triggers. Um, they were caught max short, and when you get a slingshot snapback rally like we had, you get this kind of snowball effect, momentum wise. So we had to get to a point where you kind of overshoot and then you get at the least a little bit of a stall, right? And that's kind of where we're at now. Um, let's look at like some of the stuff we were looking at because I think it gives you an idea of where we're at. If you remember some of these things we were looking at, right? Like the Ridex funds, um, generally again trend followers in a sense where they're just rotating funds from bullish to bearish funds depending on how they see things. And again, like everything else, when they get aggressive at extremes, it usually comes alongside a lot of the other things we look at and ends up setting up, a nice spot of reversal on a risk reward basis. So again, into the lows, you can see how aggressive they got. This is showing bearish flows. So the money they're rotating, the flow into those bearish funds. And you can see pretty aggressive, kind of resembles what we were seeing in the 2022 bear market. You had you had a lot more negativity, in my opinion, back then, especially when you had the Fed completely rigging the game against you, right? So you had that extreme, and you can see how quick and violent the unwind can be, especially when you get a rally of this magnitude, right? And it's totally normal. I think that's what we were kind of looking at last week. Is that for a complete unwind of what we saw into those lows would it be totally normal? And we finally got that, right? You can see, and then some, right? Pretty exaggerated unwind there. So now that that has taken place, again, alongside everything else we're going to talk about here, you get at the least some sort of digestion, congestive type price action, right? Stickier price action. Here are the bullish funds, right? So this is the complete opposite of what we just looked at. This is the money going into those funds looking for upside. And again, an extreme low, very similar to back in 2022, both the summer low and the actual bottom. And they stepped on the gas here the last few days. Yeah, I think late last week it actually the bulk of this move took place, right? So you see we're on the other side of the pendulum here, right? We swung completely in the other direction, in where they had no bullish exposure. Now they're at an extreme and got quite aggressive on the bullish side. Now, I would say this, right? And you're probably looking at this chart and looking at the 2022 bear market, and you can see a lot of times the market does top out, right? Run out of gas when you get an exaggerated move like that. I think there are good odds of that, but at the same time, it's a difficult short depending on what you're looking for, because if it's the start of a new bull trend, okay, it's only a resting area, right? Like many times in the start of a new bull trend, you'll see an exaggerated move like this. You'll see the market consolidate for, a week or two, and this unwinds a bit, and then you see another leg higher in the price action, right? So it can't be treated the same way as a sell signal on this particular thing on the bull funds here, right? It's more of the way I look at it as a pause in the sense. Okay, so now that that has happened, you can get that sticky action. This is kind of sector breadth from the Ridex funds. So again, just a general theme there. What they do is they take money and they rotate into bullish sectors, right? Risk on sectors when they're feeling bullish, and obviously more defensive and risk off sectors when they're not. Okay. The green line is when they get defensive and they're risk off. Up close to the red line is when they're feeling good and feeling bullish about things, right? And looking for more risk on. So not as extreme. This is more of a moving average too. This green line, but you can see quite the difference from where we were at. And again, the point I'm trying to get across here is that this needed to happen, in my opinion, before we can even get kind of a rest. Once you get enough momentum on the upside and you get kind of convinced you're in overshoot mode, that's what you're generally looking for. You're looking for these things to kind of completely unwind in a sense before you can get even a little bit of weakness to kind of stick. All right. Um, Here are some of the short-term indicators. I think we talked about that last week as well. This is one of the short-term sentiment indicators we look at. Again, a zero reading a little bit before the actual lows of the market. And, we got up as high as almost 80 into the rally here, right? So now this is showing coming into today with the little bit of weakness that we got in the last couple of days, chop weakness, whatever you want to frame it. You got a rinse here on some of these short-term indicators. So that's good, right? If you're bullish, that you want to see that before you can even start looking to even play tactically, in a sense, right? Here's another short-term indicator. Many of you know, obviously in the steam room, you guys know they call it the squeezometer. Up over 70 is obviously overheated. I don't know if you can make it out here. I think, yeah, I marked it off. So May 16th, you had a reading over 70, 71. All right, so we kind of little by little, you can see each and every day, we've been working that off through the chop and the help of some weakness yesterday. All right, so this down to neutral. So short-term sentiment, if you're looking to play on a more tactical basis here, you're in neutral territory, right? So in other words, if you didn't want to chase into that overheated rip, you wanted to at least see this before you start looking for long entries, even the more tactical time frames, in my opinion. All right, let's go to some of the other stuff that I would put in the bullish, still in the bullish category in a sense, even with the rally, right? Because generally what we looked at so far is kind of the stuff that was at extreme and that you're looking for an unwind, even off a short-term rip like we've had over the course of a couple of weeks, right? So some of those more longer-term time frame, intermediate / big picture type indicators we look at, that's where you don't want to see a complete unwind, right? You want to see those things still lean into the more favorable camp, because obviously if you get those to an extreme, right, if they completely unwind, all of a sudden now you got the complete opposite setup on your hands, right? Now we go back to where we were kind of right before the correction, in where you got to be careful, right? And things can happen quick. It's not going to happen off what we've seen up to this point now, but if we just hang out here for a little bit and all of a sudden we continue to melt up and there's a chase, that's where we're likely going, and that can happen quick. But here's some of them, what they look like, right? So you have these systematic funds and CTAs and stuff like that, right? That we talk about on this webinar. Here's kind of one measure globally of the systematic funds as a whole. And again, coming from max short, right? So they were as short as they can get. They were basically buyers in any type of market for the last, 3 weeks at the least. Okay. That was a really nice bid and tailwind in the market that we really didn't have throughout the correction. Okay. In my opinion, a lot of what we've seen in this rally is not just based off this, but front running this, right? Players aware that these flows are going to change that drastically and they want to get ahead of it, right? So it almost feeds on itself. So now these global systematic funds are back to now this is not even updated. By the end of this week, they're going to be long now. They're going to actually be back with long exposure now on their books. Okay, so going from max short to long. Now, again, they are not max long, right? That's what we want to try to avoid here as much as possible. Okay, because again, and just to refresh everybody's memory here, even if you're a bull at heart, you don't want these things to go from one extreme to the other in a straight line, because then, right, if you're bullish, then you got to be careful of getting caught at the other extreme, right? So that's the last thing we want. We almost want kind of more of a back and fill type market where you kind of climb the wall of worry. They keep bears entertained. They reel them in, right? Give them hope. They don't allow them to get hopeless off a 1 month rally, right? You kind of get everybody continuously spooked off the negative news out there, or what Trump does on a day-to-day basis. And that allows, if you're leaning bullish, that allows you to get your hands on stuff and continue to make money, especially off any little pullback, right? The more we unwind of what we had, the more risk you take on playing the long side, in my opinion, as we get closer to the other extreme. All right. So these things are still in good shape. Again, coming into this week, the systematic flows were still in the bullish category, not to the magnitude they were, but they still were net buyers in every tape. Okay. We'll see how it lines up going into next week. You get updates from several houses, Bova, Goldman, Nomura, a bunch of different models. So you look at kind of an average. But I think right now here, if we did pause in the indexes, even if we got choppy, a little bit of a pullback, if these guys pause here and you allow them to kind of unwind that little bit of long exposure, possibly you do get a little weakness and they get back short, I think that's where the next best entry comes from off these signals. Oh, I just exited that off. Okay. So again, we'll see how this update looks going into next week. But they still, even flow wise, they should lean bullish going into next week. Here's another look. This is from DB, and very similar, right? This was coming into this week. We'll get another update this weekend, and we'll be probably on this indicator probably closer to the zero line. Hopefully, not too far above that. All right. So that's systematic funds. Let me go in reverse here because I missed some of the other things. Here's Goldman's positioning indicator, right? And you can see, right, the dates marked off from prior lows. Even with the rally coming into this week, we still had a decent negative reading, right? So you got a lot of disbelief behind this snapback rally. Now, you're probably saying, how is that even possible with the type of, the V-shaped recovery? We're 4% from highs. And you got to understand, these professionals, even when they're buying, right, a lot of times they're not buying because they're bullish. They're buying because they're forced to buy, right? They cover shorts. They got to put some exposure on now because obviously they had no exposure coming into this rally. So it's almost, a lot of times we see forced buying, okay? And even though we see a little bit of short covering and then a little bit of buying, they're still underweight as a whole. Okay, and that's where we stand. Well, that's where we stood coming into this week. Okay, still underweight a lot of these professional positioning outfits that we follow. Okay, again, that's a beautiful thing, especially if you have a market that kind of gets a little bit of choppy and digests, and there's some negative news around it, because you get a couple of days or a week of a pullback, and where are these things going to end up? All right, they're going to be back at extreme again, and you kind of can play off that floor in a sense, right? Even on in a tactical point of view, but more so big picture wise, it allows you time to kind of get a gauge on the flow, be patient, and wait for names you may like to build positions in. You don't have to buy everything in one day, right? It feels like you have to get everything right away because you never get filled on the rest of that position. That's the type of market we've been in, all right? The ideal setup is kind of how we came out of 2022, a bit range bound and choppy initially for a few months. And then, once the macro picture started to improve, or once you get the Fed involved, you really get that catalyst for that kick in the rear end. But now you have some weight on, right? Now you got some positions that you've added to the mix. In the V-shaped rally, and it continues, not only do you unwind all this positioning stuff that's beneficial, you don't really have much weight on as far as long exposure, right? Because it feels like you're chasing everything. You're kind of looking towards laggards to see if there are any opportunities left. Okay? So ideally, again, more so if you're bullish, you want to see some weakness enter the equation, at least some digestion. My biggest fear, and you guys know I get put in the perma bull camp because I'm long only, okay? But you guys know, some of you wouldn't put me in the perma bull camp. I'm more of a cautious bull at times. But what what my biggest fear here is a meltup. Okay, because of all these funds underweight, you get any little glimpse, any little glimmer of good news, right? On the macro side, on the rate side, on the yield side, on the Fed side of things, any little thing of positivity, and I think you're going to have a scramble for shit like we've never seen before. Okay, now, yeah, I don't think that's good in any way, because what you're going to have is you're going to have an all-out chase. Yeah, maybe the S&P ends up at 7,000, but at 7,000, you're going to have the complete opposite of what we were looking at just a month ago as a solid setup into the lows. Right? But ultimately, that's my fear here, because again, any little thing of positivity that happens to arise, and you never know, right? You can't handicap that stuff. That's the tricky part about it. But you're going to get that scramble from these funds. They have to buy. They have no choice. They have to buy. And right now, they have no exposure. Okay? They've covered a lot of their short exposure, but as far as on the long side, they got zilch. They got nada. Right? Especially in the majority of stocks and names out there. Now, we could certainly get a melt up that they chase just these AI names and Bitcoin names, and that results in a melt up, right? That would be the unhealthiest type of melt up we could possibly see, right? So a concentrated melt up, that would be a complete debacle. Again, it would be fun and profitable over a short-term time horizon if you're playing the long side. But the last thing we want to do is build a basket of long exposure into a melt up that we don't know how long it's going to last. And when that momentum runs out, we got a big problem on our hands. All right. So that's the last thing we want to see. But that's ultimately my fear. I think that's the main risk, if that's a better way to put it. That right tail, I think, is the big risk out there in the market. because of everything we're looking at here, right? And here's some of the other stuff too, like you got like sentiment, just your run of the mill sentiment measures out there. I mean, stuff we haven't seen in ages, right? So you got like the Michigan survey, and a lot of people feel it's political, right? But I mean, the country's basically 50-50, right? Between left and right. So even if it's political, you got at least half the country that's suicidal right now for whatever reason. Now, you could tell me tariffs, I'm not buying it. But they literally are suicidal. Okay? This is the conference board measure, comes out every month. And then you guys are probably more familiar with the Michigan sentiment survey that we get, right? You hear about. That's the same thing as well. I'll show it to you if you want. But look where we're at. Look where we're at. What do we have? A 10% pullback. The threat of tariffs that Trump pivoted the first little crack in markets, and you got an extreme reading you kind of had here into the 2022 bottom, right? So the risk here, right? And I say that right, tail risk. If you do get something to be optimistic about, right? If you start getting some positive stuff out there on the macro side, right? Stuff that is going to get people to feel better about things. You got a huge runway here, right? You got a huge runway of negativity, negative extreme that you're coming from on a lot of these things, right? So you got a lot of ammo that can get fired, is what I'm getting at. Still, even with the rally, okay. So that's my fear, guys. That's what I'm more concerned about. And again, I'm telling you, as a bull at heart, um, don't get me wrong. I'm going to try to participate as much as possible in the melt up. I'm going to be really extremely leery of chasing stuff, because you're probably going to have to chase everything they're crowding into. But I'm not going to get aggressive in any way into a melt up. That's for sure. So it may be fun, but likely short lived. And the other thing, we kind of talked about it on, I think it was Sunday, or with a webinar got dropped Sunday, but I don't know where we were talking about it. Some of my, now not my investments, but kind of the stuff I leave behind in longer term positions, right? The longer term growth names that I usually play, and I leave some stock behind. If we get in, and again, we're not there yet, and we could discuss it when we get there, but I'm just giving you an example. If we do enter into a melt up phase, I'm looking to sell that stuff into a melt up, right? So I'm certainly not going to be buying anything longer term and with time, right? I got the complete opposite mentality. I'm looking to dump even stuff I didn't want to dump if we end up into a melt up. Right? Because again, that's usually late stage, right? Late cycle type stuff when you see that type of price action. So definitely don't want that. All right, but we'll cross that bridge when we come to it. This is hedge fund in individual names, and you can see where they're at, right? Like, you get these recoveries here. You had again another V-shaped recovery off a correction, right? Even retail is buying, and they get excited off it, but the whole professional community wants nothing to do with it, right? They want nothing to do with it. Overall, in individual names, right? So if you take it, hedge funds as a whole, they weren't even that aggressively short into the lows of the correction, right? They were kind of neutral. So think about that. Like, I think it's even worse that they weren't even caught aggressively short into the lows, and the market bottomed and rebounded, and they still barely added any long exposure, right? So it wasn't like they were even in pain and then had to flip long. They were actually in a decent position net in individual names, and they still couldn't find it in their heart to add long exposure. Again, as a whole. So what you will see from like this particular indicator, when there's a catalyst or a reason for them to really get bullish, you're going to see this thing spike significantly, right? Especially that it hasn't. Like if I could go back even a little bit further, you see kind of at least a spike up into this neck of the woods, you know? So they've been hugging the zero mark here. And if you do get that spike, that's what's feeding into the melt up. The reason you're getting a melt up is because all these things we're looking at, right, that have no long exposure end up putting on long exposure, right? And they're all chasing themselves. That's kind of what happens. All right. Again, into that bullish category, and again, the fear of a right tail chase and melt up of financial conditions. You had where financial conditions were tightening, right? So a lot of the reasons that we were concerned about before the market tipped over, before the correction, right? We needed a correction for a lot of different things, and everything little by little started to materialize. Here you had financial conditions, they were tightening even as equities were kind of holding near highs and haven't corrected yet. And now, obviously financial conditions tighten even more as equities sell off, right? That's usually how it works. You've had a slingshot back at financial conditions where they've aggressively loosened, very similar to kind of what we saw in 2023. But the difference is you didn't have a Fed pivot here. You didn't have any Fed participation here at all. Right? So it's a little suspect. A lot of times you'll see financial conditions ease a bit, right? But unless you get the Fed pivot, right, and that usually is the catalyst for a start of a new bull trend, you won't see aggressive easing on the financial condition side. But you've seen it, and this might end up showing up in some of the macro stuff, right? Let me see if I can explain it better. If you remember before the correction, you had yields going higher, you had the dollar going higher, you had quite the rip in the dollar. Remember we were talking about that, right? So let me pull it up here. And you'll see why I'm talking about it, okay? All right? Here, we got it marked off, okay? See this rip in the dollar? Okay? As that rip was going on, equities couldn't give a shit, right? You saw the dollar ripping, but equities still find a place to rotate, and the market still was making highs. But what happens is when you get this type of aggressive tightening of financial conditions where the dollar rates go higher, okay, you start to see the effect in the economic data, right? So kind of the logic, the way we were looking at things is before the market corrected, what's likely going to show up is some sort of growth scare, if you remember I was talking about, right? Because financial conditions tightened, we would see the impact in the economic data, right? And you would start hearing the R word again. Oh, we're here a recession, higher probability of recession, and that will likely weigh on equities. Okay. Now you've had the opposite, right? So now, even though yields aren't coming in much, right? For a variety of reasons. You got what's going on in Japan and everything else. But you had the dollar, which has aggressively sold off here, right? And financial conditions have eased aggressively. So if yields kind of hang around here or even start to trade lower, you're going to you should start to see the benefits of that in the economic data, right? And that should be good news. So that's kind of, again, going back to where good news may come from, even if you don't get any help from the Fed per se. All right. So just like we were waiting to see the impact and the fruits of the tightening here, the market wasn't showing it. Now it has. You likely see the opposite of that. And, we possibly already are seeing it with the market rallying as much as it has already. Okay, so you got financial conditions which have loosened aggressively. Liquidity, right? And again, I'm no liquidity bro. I follow a few outfits that I have a little confidence in kind of they know what they're talking about, right? But I'm just looking at liquidity in general terms, and I see nothing but bullish on the liquidity front, right? And you don't have to know what the hell you're looking at to see that it's more favorable right now than it's been. And again, you got Bitcoin at new highs. Is that a coincidence? I don't think so, right? I mean, it feeds off liquidity. So you got stuff like M2 and all these things for whatever reasons. I don't even want to get into the plumbing of this stuff because I'm clueless. Okay? But all the things I'm seeing on the liquidity front look nothing but bullish to me. Right? And here you got I think this is M2 with that leg that a lot of people follow, right? And again, you had this little bit of tightening in liquidity, right, that we were talking about again before the correction, right? You had the market making new highs, but liquidity was starting to tighten up a bit, got a little sluggish. Okay, now you get a correction. Now you got the complete opposite. You got liquidity making new highs, right? You got M2 with the leg included shooting through the sky. So liquidity now is back in the bull corner, right? As you can see here on the chart. The pink here is the SPX, if you're wondering. So this is kind of M2 liquidity shit, right? So again, a lot of the things that we were worried about ahead of the correction are, and they have been, right? They're in the favorable camp, okay? They're still there, or they're at least some of these things are still close enough where the only thing that would ruin it would be a meltup, right? Would be a meltup. Okay. So that's on this end here. AAII, obviously, you had this thing was completely wiped out. You've seen some improvement here, right? You had where is it here? It doesn't go back. Oh yeah. At the end of April, just 20% bulls, 58% bears. I think the highest reading since COVID, if I'm not mistaken. Just complete washout. So you got a little bit of improvement there on the bull side. Now it's 37.7% as opposed to 21. All right. So you have some improvement on these things, but the big picture stuff, you're still close enough to where there's a lot more work to do for them to wipe that out. I think that's it, right? Did I go through all this stuff here? I showed you the Goldman thing too, right? I showed you the Goldman thing. And here. Oh, this is not it. Where's Sharpies? I didn't add Sharpies here. I had to. Oh, yeah. Here's credit, right? So just whatever was the fear where you had a little movement, you had some concern in the credit markets, right? From spreads and swaps. That crash risk, as they call it, got completely taken off the table. These are credit default swaps inverted here, and you can see pretty much have mirrored equities, right? So no concern at all behind the scenes in the credit markets. And Sharpies, as a lot of you like to get an update on here, commercial hedgers, who were aggressively short ahead of the correction, have completely removed all hedges and are slightly long, even with the recovery we have seen. Okay, even with the recovery we have seen. Another thing on this front, in VIX futures, you have Sharpies short VIX futures, which is really rare. Okay, commercial hedgers almost always have some VIX exposure on, right? Their goal is to be hedged. So they almost always have some sort of VIX futures exposure on. When they completely remove VIX exposure, obviously they do it for a reason on the positioning side, and that's because it's kind of offside in the other direction. What you have is you have hedge funds that are long VIX futures. So hedge funds are long VIX. Right? So it's really difficult, based off positioning, to kind of get bullish on any VIX move sticking here without some sort of calamity event. Okay, I think that's another right tail risk, in my opinion. Right, you get this complete unwind of VIX ZVIX. Again, you may not think it's going to happen, right? Honestly, I don't, and I don't take this the wrong way. I really don't give a shit what any of us think. You know what I mean? We may not think it's going to happen, just like we didn't think we wouldn't see a recession in 2023. But guess what? If you were positioned for a recession going into 2023, you got absolutely mangled. Huh? So I get it that all the quote unquote smart people, intelligent people are all bared up out there. But I told you this even a few weeks back, right? That's even more the reason why we're likely not going much lower, is because they're all in one boat. Okay. And if something happens a la 2023, right? Like the recession not showing up or AI showing up and they need to get long and chase, you see what can happen. All right. So Sharpies, the takeaway from this, you have to be bullish, right? You have to be bullish from this. That Sharpies have literally have not slapped on any hedges yet. Now this can change tomorrow and make everything I'm saying kind of moot. But up until this point, they have not put on any hedges throughout this whole entire move back. All right. What else we got here? Anything else? I think that's pretty much it on the indicator front. Now let's talk about flow quickly, because that's, to me, that has been my complaint. Right, even coming out of the 2022 bear market, and I'm not pointing fingers just to point fingers, but for me was the sweeper activity was the reason why I didn't get as aggressive as I should have coming off that 2022 low. Okay. Yeah, I participated. I did a lot of trading on I trade long only, but I did a lot of trading on the long side. But I really couldn't I didn't get the chance to put on much weight swing position wise, because sweepers really never got aggressive in too many names, right? So what we've seen coming out of the 2022 low and bear market was a rush into mega cap primarily and some large cap tech, right? If you remember Mag 7, that's where the birth of Mag 7 really bubbled up, okay? That's what led, and it was extremely concentrated, right? It was just that Mag 7 trade with a few other large cap tech names, and that was it primarily for the first leg into 2023. Okay, so me myself, most of you know how I play this game. I'm not buying Microsoft, right? I'm not buying Microsoft. I'm not buying Amazon. These are not names I'm playing, right? So if I'm not buying these names, and that's where all the aggressive sweeper activity was focused, and nowhere else, you could see how that can leave me quite frustrated, right? Feeling good that the summer fall 2022 floor was a legit floor, but there's nothing for me to buy, right? There's nothing for me to position in on the long side. Okay. So that's been my biggest complaint. But then, obviously as the bull trend broadened out at times, we had spurts of it, right? We saw the semis get involved. Then that got a little concentrated and crowded. Then we started to see other parts of AI. So you had stop and go type sweeper activity throughout that bull trend. Okay. So one thing I was really kind of hoping for coming out of this correction was to see a different wrinkle here. Right? A different wrinkle. Whatever that wrinkle may be, I don't want to see mega cap tech be the names that lead us out again. Sweeper wise. I'm not talking price action. I'm talking sweeper wise, positioning wise, right? I don't want to see the same names. Now, what we've seen up to this point now is really interesting because it's not really the same thing we were seeing coming out of 2022. It's not mega cap as a whole. It's not Mag 7 as a whole. It's not the semis as a whole. It's some of those names, right? They're seeing positioning as they usually do. But there's been more up to this point, more of a focus on some of the familiar speculative names. Now, I don't know if that's any better or worse. I consider it better because at least I can trade these names. Microsoft, I'm not even trading much of, right? So at least these older spec names, I can at least trade them, even if I'm not building positions in them. But up until this point, we've seen like Bitcoin, and the strength of Bitcoin obviously has a lot to do with it. But we've seen a lot of these Bitcoin related names see some aggressive activity. The Huts of the world, BTDR, right? All those type of names. We see the nuclear names, the quantum names that you guys know, right? The QBTS, which they've just tattooed over the past few days here. This guy, right? So again, these aren't new names, and it's hard for me to buy that they're going to be the new leaders of a new bull trend here. Okay, they can have a hot month or two, all right, but a company with zero revenue that's not looking for profitability for a decade, okay, is more than likely that's not going to be the group that leads a new bull market, right? It may lead a new mini bubble, but it's not going to lead a new bull market, right? So up to this point, what we've seen is more of what you usually see in a bear market rally and chase than the start of a new bull trend, right? Okay, because in a bear market rally, and these V-shaped kind of rallies where people are getting squeezed, a lot of these names are heavily shorted, right? So a lot of the call buying initially stems from players and funds caught short in these things in the correction, and now they're sweeping calls to hedge those short positions. They can't cover the short, right? They can't be that quick covering the equity short. So what they do is, for a cheap amount of money, right? Because they're dirt cheap, these out of the money calls in these things, they sweep calls all day long to hedge those short positions, right? And that's generally what we've seen overall. Okay, that's generally what we've seen. Now there have been some selective names like this QBTS, hands down, has been a lot different than any of the other quantum names, right? You've had some what looks like quote unquote institutional buying in it, right? You've had some real buying, as we like to say, in it. But overall, a lot of these familiar spec names, it's been cheaper, shorter dated action, right? Where resembling that, they're riding momentum. They're not making a bet on the company. They're riding the momentum of the stock, if that makes any sense. Okay? So that's been the most aggressive flow that we've seen up to this point so far. Okay? Now, I don't want to make too big of a deal out of it, all right? Because in reality, we really didn't even have much weakness to see any real buying show up in. You know what I mean? Like, we haven't seen any weakness, any selling yet in this rally for any buying to come in and look supportive. So it's totally normal for the flow to look like this. But again, you see where my fear gets in the way, right? If I'm concerned, right, if my concern is of some melt up that they chase and kind of gets away from us, and they start just chasing all these names are all going to be gone in the snap of a finger, and you're forced chasing all these names, right? And if they're not really buying any new names, you really don't have me. I really don't have much to kind of work with, right? Besides just get in the middle of all this aggressive buying, which I'm kind of doing. So let me tell you guys, especially in the steam room, what I've been doing, right? and a lot has to do with to see like where the next few weeks shake out. Okay, what I'm kind of doing is trying to cover my ass on both ends. Okay, I see action that piques my interest. Right, it's in a respectable spot. In other words, the stock doesn't look like QBTS or IONQ as they do right now. Right, hasn't exploded yet. I'll buy some. I'm playing equity, but it doesn't really matter. I'll play the equity, and if I get a decent pop, I'm selling into that pop. But if I like the name, right? If I think the name would benefit or some sort of melt up, right? It's got a sexy sector to it, a sexy story to it, regardless of whatever the case may be. I'll leave some behind, right? So, like for example, serve. I took a stab on this or some action a few days ago, last week maybe it was. I sold into the pop. I left just 1,000 shares of SERV. You know what I mean? eToro. There was some July buying in eToro. Post IPO. You guys know I like to trade that stuff. Yesterday we got a $4-5 pop from where the action came in. I took some profit and I left. I only had 3,500 shares of a total, but I left 1,000 shares behind. Okay. What was the other one? Peloton. I I bought off cheap July Lotto. It was pretty aggressive though, but really cheap July Lotto buying. I bought some Peloton. I sold the whole shit today. I didn't leave any Peloton behind because again, I just it's Peloton. I don't want any Peloton. You know what I mean? So depending on the name and whether there's some sort of appeal for me, that I like it, and you guys know what I usually like, will determine how much of it or if anything I leave behind. Right? Again, if like RBRK, a name like this shows up, right, with kind of more a legit name in a sense, not just a hype name, I I buy just like I bought the others, but I probably give a longer leash to, and leave a larger position behind. If not, maybe even the whole thing, depending on how much I like it. So that's generally how I'm treating the bulk of everything I'm playing for now, until we get more information. Right? Again, my goal, like not my goal, but my wish, like if I could have things shake out the way I want them, is I don't even care what the indexes do. Let them do what they've been doing the last few days. You know, I want to see under the hood type growth names. You got see interest or cyclicals. I don't even care at this point. But I want to see new names. I want to see new names. So that's kind of how I'm playing it until we get more information. And yeah, I'm hoping for any weakness we can get here. Any weakness we can get here, I'll take it. I'm not concerned about weakness. The weakness is not going to change the way I'm looking at things in a more negative way. Right? It's a potential melt up that would change things in a negative way for me. Honestly. If that makes sense to you guys. You know? What else did I play today? But there's been action out there. It's fun, especially for trading. But I don't want to have a position in Peloton and get caught in a downdrift in Peloton. You know what I mean? That's not what that's not what I want to do. You know? Or like even these quantum and nuclear names, I'll trade them. If one looks a little more interesting than the other, maybe I'll leave a couple thousand shares at the most of it longer term, and whatever happens, happens. But I don't. I'm not buying these older zero revenue post mini bubble names. It's just I can't do it. I can't do it. I'll trade them, but I'm not building a nice size position in them. That's what I'm not doing. You know. What? Oh, this right? I bought some of this today. Galaxy. You know. This is another Bitcoin shit. I don't even know what it is. Some sort of Bitcoin related play. But they were buying June, July. There was decent action in it. Cheap. You understand? And that's the turnoff. It's cheap action. Just so you guys understand the difference, so just in case you may be new. There's two types of buying that can show up in the names. Okay, I use because there's a perfect example. You guys remember the Bitcoin names when a lot of us were excited about it, right? When Wolf was $1.90, right? All these Bitcoin names before anyone really, they were kind of dead money at the time. If you remember the circle's still there. Okay. Oh, what the? This trading view. I can't control anything on this trading view anymore. All right. So here it was, right? So you kind of had dead money here in a lot of these Bitcoin plays for quite a while. And the action that showed up here was not the action we're seeing now. Just so you guys understand the difference in the names we're talking about. Okay. What they started buying, the first round of action we started to see the accumulation in Wolf was they were leap in the money or deep in the money calls. Okay? They were laying wood in Wolf Premium, right? So they went out 9 months, a year out at the minimum, and they weren't buying cheap premium 20 cent, 30 cent, 10-cent calls, right? They were almost treating it like equity. Okay. And it wasn't just one day of buying, right? These stocks were out of favor. As you can see, they were dead money. Okay. These things were chopping around without a pulse. But those buyers continuously showed up into that death. Right? So they were building a position. They were making a bet on the company, right? They weren't trading the momentum. They weren't short getting squeezed, right? They weren't some retail jabroni buying 10-cent weeklies, okay? They were treating the calls as they treat equity, right? It was institutional buying. And then it's no coincidence, right? You see some of those bigger names when those 13F filings came out, right? Like a Druckenmiller and those guys, you saw all these names on their books. Right? That was the type of buying that showed up in these names. That was the excitement in these things, is that you had smaller, lesser known names that were out of favor, no eyeballs on them, but seeing institutional buying. Now what we're seeing is completely different. Okay. And like Galaxy is a bad example, but let me just show you like this action, right? Because Galaxy just started trading options, but I just want to show you the kind of action, right? Let's see, where am I post here, right? Is this it? Yeah. So these are the type of sweeps that we're seeing in this, right? Yeah. June, right? 35s. Those are what? How far out of the money? $10? $10 out of the money, 80 cents. That's not too bad. But what was this? 40 grand, right? Here, 38 grand, right? And they're really active. Like the volume was decent here, right? So there was, as we like to say, aggressive buying, but it's not the same. It's not institutional positioning, right? In my opinion, they're playing off the momentum that we're seeing in these type of names, right? It's speculation in a sense. Instead of position building, it's speculation. Okay, so that's kind of the difference in the flow. But you don't see institutional buying in names like a Wolf often, right? Because they're cheap, and a lot of times when they're that cheap, the fundamentals are crap, and you don't really see a lot of long only fund buying in these type names. You see it in these guys, right? You see it in these type of guys. RBRK, TEM, TTAN, right? A net, right? All those type names. That's where you see kind of these growth funds positioning in these names. Right? So these are lesser known names, but they're like this guy was $80, $30, $40. It's a completely different level. So the difference in the flow. I'm just trying to give you guys an idea. Here's like some of the names they're buying. You guys know all these names. Oklo, right? You guys know all these names, right? Like, look, you've seen this name before. NNE, right? And this maybe, I don't know. I'm just pulling up what's in front of me here. Maybe an NNE is more quality than an Oklo or SMR. I have no clue. But, to me, they're all revenue, zero revenue, losing money. Okay. But again, if there's aggressive action and when there's momentum, you can make money in these things. You can make money in these things. And at the right spot, you may even want to tuck them away. But the problem is if you don't pick a spot where you're looking to get out of them, you can watch it vanish, right? Pretty quick. SMR, right? That's another one. That's SMR. That's a new name too, right? Sahil, right? If you told me they were going to buy speculative names, I can give you literally the whole list of stocks that we're going to see flowing. Honestly, the spec flowing. Okay, so what I would recommend if you really want to be more picky about them off the flow, I would wait for kind of the good looking flow to show up in any of these names and play them. The problem is they may not show up at a spot you like or I like. Okay, and this is the perfect example. Right? Like I played the QBTS, but I didn't want to hold it. So I got out of it long before this happened the last few days. Story of our lives. But we caught real buying. Huh? I mean, Rigatoni had you had a real 2027 leap sweep the other day in it. All right. So maybe that catches your eye and you want to get in it. But the majority of the flow in these things are all spec. All spec. All spec. I'm trying to think what else. And they're not all winners. I bought this shit off some spec action, and I don't know why I'm still holding it, but I'm down on it and I'm still holding it. This AMTM. But a spec. Oh, this was the dome, Trump's Israeli defense dome thing. I think. I think there was chatter that they might be part of it. Yeah, I bought here. See? So I bought here of some action and a nice little shake and bake they got me in. But I'm still holding this thing, so I don't know why, but I'm still holding it. So that I don't want you guys, those of you not in the steam room, thinking I'm talking about all easy winners here. They don't always, pop even when they're seeing this spec action. But the majority of them can be traded. Golden Dome. God, I couldn't get it out of my mouth, Fedora. Golden Dome. The Golden Dome. BITM, Sahil, or BTM? Oh, BTM. BTM. Let's see. Yeah, look at Bitcoin Depot. I like that name. Look at that. So there you go, right? And you see like the difference is they move in a pact, and it's almost like all of them are moving, right? It's almost like the fart coins, right? Or whatever you guys call the kiddos call those coins, right? Not Bitcoin, but kind of the shit coins of the bunch. They have their time and they all move together, right? But you kind of got to pick your spot where you're going to get out of them because the air comes out of them at some point. Yeah. So what we're seeing is not new bull trend, bull market leadership, in my opinion, right? It's what you would normally see coming off a low where everybody was caught short and had no exposure, and you get this kind of slingshot rally off of. That's the kind of flow we're seeing to this point. You got some leap buying out there and some of the more respectable names that you guys like to trade. Not as much now. We were seeing more early on as we rallied off the lows, like Avgo, ServiceNow, those type of names. Um, so if I had one complaint about things, and it's not really even a complaint because you're getting a little out of control complaining about it, because at least we have some action to trade off. It could be a lot worse, so I can't complain. But if I did have any gripe right now, it would be very similar to kind of what we were seeing out of those 2022 bottom. Is you're not seeing true bull market, new bull market, or new bull trend characteristics yet in the flow. All right, you're seeing bull flow, but you're not seeing what you would normally see at the start of a new risk on move, or the start of a new risk on move, right? You usually see this type of flow late stage, as a late cycle, as people like to say. Does that make sense? Late cycle. You guys know what I mean by that, right? Or when you start seeing the same recycled names over and over, seeing the action continue, like they keep getting recycled, that's late cycle, right? In a bull market, a lot of times. That's not the start of it. Like the start of it, you see new leaders emerge, right? Towards the end of it, they keep recycling the same shit. There's no new names. That's the problem. And that sounds like easy to navigate, but doesn't mean that even if it's late stage. I'll give you an example. 99 was late stage, okay? And you guys know what happened in 99. All right, so late stage can leave quite the dent. So doesn't necessarily have to be looked at as a bad thing. But when you're seeing those new bull market characteristics, you have time on your hands. You got time on your side. TMC, that's another spec name that actually saw half decent buying. Jan calls, right? They were buying there. TMC. This is some deep diving, whatchamacallit. But here, again, look. Right? What do they do in sales? Zero revenue. They're not going to lead a new bull market. It's just not going to happen. It's not going to happen. It's not going to happen. The reason why this thing is moving, supposedly, is Trump is loosening up some law that allows them to go into the depths of the ocean, if I'm not mistaken, and gather up metals and shit for batteries and stuff like that. Right? So this is sexy story stuff. Right? This is not fundamentals. This is all story. So, but again, if you're looking for something that's not the same theme you're used to seeing, right? Nuclear, AI, whatever. This is one of them, TMC, and it's had quite the move already. Pretty decent move. Like Nvidia or ALAB is what you mean. Yeah, these names, again, in a melt up, you could see these names trade higher and they can overshoot. Okay, they can overshoot, but at some point, after they overshoot, you're going to have an expensive market that looks really toppy and extremely crowded again. All right? Because everybody owns these names. Right? They've chiseled some of it into the correction, but you get a rush back into these names, you get a melt up. They're going to be all back into these names again. If you're making the point that if these guys lead again, right? ALAB is not. I wouldn't consider ALAB a part of that. ALAB is kind of a newer name, so you want to see more. We want to see more names like ALAB. Put it that way. That's what I'm kind of getting at, Stacey. You know what I mean? I say we, like we're French or something. I want to see more names like A-Lab, right? The more names we see like an A-Lab, okay, we continue to see names like you got time in that bull market as you continue to see more new names and new names. Like again, if you think of COVID, coming out of COVID, all right, just to refresh everybody's memory, okay, you had the capitulation, a crash, COVID, okay, and then you talk about a wall of worry, like you had nobody could get bullish, so nobody wanted anything to do with stocks for good reason, right? There was no vaccine, but literally you were climbing the wall of worry, okay, throughout that COVID rally, and as everybody was nervous and you're climbing the wall of worry, I remember every day there would be 2, 3, 4, at least new growth names that emerged, right? And you had a whole theme, right? The whole stay-at-home theme kind of gave birth, if you remember. So, like, you had Zoom, which was one of the leaders, and then you had some of the software names got hot, right? And then you had a second round, you had Peloton, and then you had a T-Doc, and then you had I don't know, some other school stock stay at home play. Then you had, quality software. You started to see those things go gangbuster because now software was being used more, you know. And then as that rally continued, as you got to that late stage, right, that late in the rally, that's when you started to see more and more of the crap show up, right? You had the meme stocks, you had SPACs, no fundamentals, no nothing, right? There was no nothing in these names. Complete speculation driven completely, right? So again, you saw what the SPACs did. You saw what GameStop and AMC did. You had quite the move, but they're not going to lead a bull market from there. You understand? They can lead a bubble, and then that bubble pops in those stocks, but it's not sustainable. Right? Then you started getting the Kathy cheap one skills. It just, you talk about new names though, like it was endless. It was endless. It was endless. It felt like it never was going to end, the amount of new names in that COVID bull market. And don't get me wrong, you had crap there. Like you had a good amount of companies losing money and based off a story, but you also had a good amount of quality stuff, right? Eventually they got expensive, but think of it, Shopify, right? You had all those, the Etsy's of the world. Like they all had decent fundamentals to begin with, and then they were pricing in that we were going to stay at home the rest of our lives. Nobody thought we were coming out of the house ever again. Remember? That's kind of what we were being told, to stay at home trade. You'll see the doctor from your computer at home. You'll do this from home. They had nobody going outside ever again. You had the vaccine stocks, Moderna, NVax, Regeneron. How many vaccines? It was endless. It was endless. So it doesn't have to be to that magnitude. Like that COVID rally was something else. But I'm just giving the example of the new names. Endless, endless. Endless. And you literally climb that wall of worry all the way up till we actually got the vaccine, right? Like that was, things aren't going to get better till we got the vaccine. And literally the market was great all the way up till we actually got the vaccine. Right? And then you had travel names starting to break out because now they're pricing in that we're going to start coming out of our house. It was just never ending. It was never ending. This has been different. This has been, again, not all the time, but the majority of the time, and you hear it from the talking heads on Bloomberg, CNBC. A lot of times it's been a concentrated bull market. It's been really concentrated. Oh, the fintech, good call. That was it, right? The fintech trade out of there. That was ridiculous. The Squares, the PayPals. I forgot about that too. Good call. That was a huge theme. You had some good stuff there. You had some really good stuff. So every bull market's different. Yeah, that's what makes the game interesting. It's just when it gets tricky when it's the same names, because this is what happens, right? After the initial rally, like let's say what we have now, okay? If the market's concentrated, you get a rally like this, and the majority of the names that see good looking flow have seen it, right? So now all the names that look interesting, you either have played, you've bought and sold, or you like them and you're holding on to some of it. But now they're at much higher levels than where you were playing it. So if you're not seeing new names get attention, what are you doing? You're gonna trade those same names again, and that's basically what people have done, right? We saw it in the semiconductor. The only way to really play AI was the semiconductors, and led by NVIDIA, everybody piled into the semiconductors, and the semiconductors are still paying the price for it. So that's the problem, right? Like, okay, semiconductors look good. Let's buy AMD, LRCX, and whatever. Okay, they run for a month, right? A month and a half. Now they're higher than where you purchased them. Now what do you do? Right? If the semis are the only thing getting the attention, the only things working, the only thing seeing momentum and flow, where are you looking for opportunities now? You get in the habit of trading the same names, and then you get caught holding a bag of those names when they go dead. That's kind of the problem, right? Where if kind of when you see new names, it's a measure of appetite, risk appetite, right? The longer you're seeing new names emerge, that's telling you there's still a healthy appetite for risk, and there's still momentum in the market. That's kind of the difference. So yeah, again, I don't, there's really not a whole lot to complain about. The only complaint would be kind of a continuation of what we've seen. And Sahil, who's a steam room member, you guys know Sahil. We've talked about this ad nauseum. The small caps really aren't getting involved. Healthy small cap, mid caps. That could be because maybe the Fed really hasn't gotten involved yet. Maybe that's subject to change at some point. So there are probably reasons why. I'm sure there are reasons why, but that's been the one blemish. That's been the one blemish. Oh, Roku. Remember, that's another one, right? The streaming names, right? Stace, that was another one. The streaming names, the crazy runs. Even like SE and Net, like all sorts of names. There was all sorts of names, right? Tech, software, this, that, apps. They were insane. Insane. It was just never ending, guys. It was never ending. It was really the opposite of what we've seen in this recent bull market. It's complete opposite. So what else? Any of you guys looking at? Oh, it's I think Sahil who mentioned gold. What looks interesting? Gold miners here look interesting. They're probably it's probably going to tail gold though, isn't it? That's the only thing I think that you kind of got to worry about. It looks exactly like gold, doesn't it? Yeah, they look identical. So if you're playing the gold miners, you're basically playing gold, and you're probably looking for possibly some outperformance out of the gold miners. Don't hold your breath. Many people have waited on that. It's a rare bird, but you're making a bet on gold here if you're buying the gold miners. But they, looks interesting. Looks interesting. Yeah, Zoom. Stacy, I mentioned that earlier. Zoom. I remember Zoom. I didn't get my hands on because that was kind of early and ripped. I remember one of my best plays was Peloton back then. Peloton was one of my better plays back then. Only because the sweeper activity was nuts. It was insane. When they started sweeping this Peloton back here, insane. It was insane. By so many names. UNH, RW, flow wise, it's been a little messy because you got a lot of news there. And I know the stock's been hit pretty hard. I really don't have much of an opinion. Healthcare as a whole, you got what looks like probably decent opportunities over a longer term time horizon because they've been out of favor. Like even this guy, right? ABBV, yeah, a little bit of a correction. Yeah, I almost feel safer buying names like this. UNH. I don't know what the story is here. I don't know enough about it. And flow, there's been a little bit of flow in it, both calls and puts, but nothing that caught my eye that, oh, somebody's jumping in here. I haven't seen anything on UNH flow wise. And that's all, honestly, that's all the advice I can offer you on this thing. Otherwise, I see what everybody else sees, a stock that's been hit pretty hard here. That's all I can tell you. Yeah, Peloton, I played. Stace, I played Peloton. I sold it today. Peloton had, but here again, Stace, just to give you an example, right? Look at what they're buying in Peloton. Now, no matter what they're buying, okay, here's how I like to play it. If the action's aggressive, okay, what I mean by aggressive is you're seeing that appetite for calls. So that rapid fire buying, okay, I almost always will make a play on a name that's catching that action intraday. Okay? So, no, even if the calls are cheap, even if it's speculative, I'm probably going to trade the equity intraday. Okay? Just to get in the middle of that buying. But, for me to hold on to that position and not sell a rip, I want to see decent quality buying. And this hasn't been quality buying. Like, let me show you what they've been buying here so you can see. Like here, you see some of the orders here, right? 15,000, 15,000, 15,000, right? The main line, here's the main line, July 7th. And there have been a lot of them. But, they're cheap. Here, look. 91,000. Was this not yesterday? I think the day before yesterday when we bought it. 91,000 of the July 7th. I think they were 10 cents, though. They started buying them. A dime. So, it's speculation. GJT in the room claims he heard some chatter that they got some music deal, possibly. That could be the excitement around it. But it's definitely speculation. Okay? Now, kind of that quote-unquote institutional buying that I'm referring to, right? What you normally will see, you won't see this volume, first of all. You won't see it outrageous like that all in one shot. You'll start to see them coming in with smaller pieces but larger dollar amount, right? So they're not paying 10 cents for out-of-the-money calls. They're going deep in the money, right? Here's an example. Look at this. Now, RGTI, literally, there's call flow every day in RGTI. Okay, for the record. Every day, if I want to make up an excuse to you guys just to make it up that it's bullish, I can make the case for RGTI. Okay, because there's always call flow. But this is what caught my eye the other day in RGTI. See, look, like RGTI today, they were going nuts, the calls every day. Okay, here's the difference though. What day is this? I can't see the days on here. May 14th. That's too far back. Hold on. Right here, cheap flow. What day is this? May 19th. Is that yesterday? No, a couple days ago, right? So like this flow every day, to my point, is what I'm getting at. Okay? And then, where's the action? Here it is. Okay? This was kind of the bet that looked different than all the rest of the flow we see in all these names. And here it is. All right? 285 lot, 285 contracts. Now, granted, they're leaps, right? But you see the difference here? So now you see a sweep like that, and a lot of times you start to see a little more accumulation on that line around it, and you know it's not speculative buying. It's somebody at a lot of times there are institutions that are taking a position in the name. Okay, now again, this is just one order, but there was a reason, kind of like it caught my eye, and I'm talking about it, or just one order. It looked different. There was a real buyer instead of just momentum driven speculation. Like the rest of the action, like you look at today, okay? I mean, there was crazy action. Was this today? I can't. Yeah. Like look at this volume today. All right? But they're all strictly, the majority are playing the momentum. Playing the short term momentum. So that's kind of the difference in the action between the two. I mean, I bought some of that Galaxy tea, but that's speculative action. But you know how I like all those post IPOs. I always buy them. You know that. I bought some Galaxy. What's up? Did you end up buying the? This is a delay on here. I keep forgetting. Did you buy the Galaxy tea? Oh, I saw Madden just posted zero hedge. OnlyFans owner in talks to sell platform for $8 billion valuation. Oh my god! Oh my god! Yeah, but see here, like you gotta pick a spot. You feel horrible like when when you're not when are you gonna sell it? Okay, so if you didn't sell it there, all right, what are you gonna say? Like you wouldn't sell it now? And then if it goes higher, you're going to be sick then. But 6 months from now, when it's trading at $2, you're going to be happy you sold it. You can't complain. You can't complain. I did some comment. Oh, cool. Yeah. I just like the IPOs thing. I bought this one too, but I kind of I traded it. What am I typing? I don't know what the hell I'm typing. eToro, but I left a little stock behind. If this kind of drips down again for whatever reason, I might add back what I sold on eToro. This actually wasn't even too bad, the eToro. What was it? July 40s, I think they were. Wait, July 60s, I think. July 60s. Yeah, but they're all moving in the same shit. It's all the same shit. I sold $4 RGT. I sold sick. Yeah. Listen, sometimes you get lucky. Sometimes there's no rhyme or reason behind it, guys. Trust me when I tell you. Sometimes you sell them too early. Sometimes you get lucky and you sell them and they go lower. Like here's an example. Okay, am I happy? Am I happy or Sahil that I sold soon at $23? Am I happy? Should I be happy? Is my question. Right? You remember soon. I held it all this time, right? From back here. You owned it with me. Okay? So I owned soon back here and I sold it at $23. I know this sounds silly, but you'll see my method here. Should I be happy that I sold it? Because I don't own it anymore, as you know, right? Yeah, I should be happy, right? Now, things get crazy. Now, 6 months from now, Soon's at 35. What am I going to say? I should have never sold Soon. You know what I mean? You understand what I'm saying? You understand what I'm saying? Like, we go into some melt up euphoric chase and Soon goes to 40, right? What am I going to say? Oh, man, I should have never sold Soon at $23? That's my point. Like, we can always find something to complain about, always. Even when it looks like a good move, we'll end up complaining. Trust me when I tell you. All right, and then you have stocks that just torture you, kind of like the SE of the world that destroyed my life. Ah, gotcha. Well, again, to your point, that's a good question. I don't want to get back in Soon, but Soon hasn't moved, right? So maybe the rigatoni now has been heating up RGTI, and that's why maybe you're a little more eager to get back in. You understand? But I mean, when the stock was dead down here, I'm sure you felt good about your sell into the correction. You know, the point of what I'm telling you, CEOs, is don't hurt your brain trying to figure it out. It's there's no easy answer. You know, there's no easy answer. I mean, if you like, the only solution is if you like if you really like a stock, okay, and you believe in it longer term, you should hold the piece and just never sell it. But you can't be mad at yourself if profits disappear, because if you're never going to sell it, there's going to be one of those pullbacks where it's going to look like a really bad move holding it, you know? Yeah, that destroyed my life. I see, like this. I didn't know you CEO back then. You had to see, like, and you, especially when you had a bull market, like we were talking about COVID, where anything you sold in the COVID bull market, you felt like shit. Anything, because it went parabolic after you sold it. All right. So like this SE, look at this. Okay. Here's another example. All right. SE, we had the whole entire steam room buying SE down here and selling it, and then watching all this happen. Right? We watched all that happen. Like, that'll make you sick. But then, like look where it ended up, right? And then it comes all the way back down. Now it looks like a good move again. And then it comes all the way you can look at these things and find an excuse to drive yourself nuts. Yeah, and you know what I realized too, Tobias, there's no right answer. You know, we're always looking for a way to figure out and to get it right where it softens the pain. There is no right answer. There is no right answer. You know, there's nothing. There's nothing. Yeah, options you can roll, but even then, right? You get caught in a correction in options. A lot of times, that last roll goes underwater, and then you don't have exposure in the name anymore. There's no. The only thing that has helped me a little bit has been you leave a smaller piece behind when you sell, and it makes you feel a little bit better about it, a little bit better, that you at least have a little piece. Sometimes that little piece can add up, you know? Sometimes it can add up. But if you're thinking about, like, if you're trading any sort of size, and size is relative to whoever, right? So, size can be larger to one than to somebody else. But to yourself emotionally, if you're trading size and you're trying to figure out, like, where I should get out and was it a good move or not, forget it. You'll drive yourself insane. And it's impossible to hold any size long term and ride out corrections. Impossible. Don't let anybody fool you. Impossible. Impossible. Unless you don't look at it ever. Unless you don't look at it ever. What do you think about SE Wall Street Bets play back then? Yeah. I mean, it was, had the numbers, had everything. APP, do you like that here? Are you holding APP? I mean, that's had a nice comeback. By the way, this is another name, right? This is another name, APP. That has been really nice in the last bull market. APP, a net, SMCI, those all were kind of the new bull market characteristics. But what else? What else? Anything else you're looking at? I'm trying to think of even more speculative names here. Oh, let me talk about some of this. Again, you probably don't have interest in these names. I don't blame you. CSX caught heavy volume today. I'm not so excited about it. Let me pull it up so you can see what the action looked like. But you may like the sector or whatever. Hold on. So here's the action in CSX today. Huge volume. Now, the bulk of this action was in negotiated blocks. There was a negotiated block of, I think, 30,000, if I'm not mistaken, then another one. But there was some sweeper activity around it. So there was sweeps before they front ran the block and after. I don't know. It's not even the name. The flow doesn't really excite me too much. I would rather see more kind of a higher delta type action there, in the money, with time, at the money in time. That kind of went the cheaper route. Again, giving the impression like they just looking to put on exposure. Where is the? Let me see here. There was a big. I didn't even post the block. The sweeps were, like this is a small sweep for CSX. Okay, sweep, nothing huge. The big size were the blocks, and you guys know I don't like trading with blocks. They could be replacing equity. They could be doing a million different things there. I think if you like CSX, it's worth taking a stab off of the action. If you don't like it, I'm not playing it. I'm not playing it. And here's the other thing, like, but you guys know this about me. A name like this, okay, I don't want the action to show up like this all in one day. I know that sounds crazy, but I don't want the whole entire world to see what I see, right? Like, think of it too. If you're an institution and you're looking to build a position in the name, right, which is usually done over a time period, this is like obvious, blatant, right? They're not trying to hide anything here. They don't mind the whole world seeing that they're buying CSX. So it's not that action can't work out, right? Even a market can bail you out, right? The market goes higher and the sector goes higher, you can make money with it. But it's just the type of action that I like to see, especially in a name like this. This is not really it. There was another name, Etsy, that caught a little bit of action. That kind of caught my eye, but they ended up closing June call. So Etsy was a roll, it looks like. So here's the buying in Etsy today. November 50s. All right? So these aren't bad. Decent orders. Okay? This is kind of more my speed, my type of action I like to see. Even more so if they continue to come back for it. But, and this is a bag holder name, right? You have a lot of people who are holding exposure in this name underwater. Here's June. You see this? June 50s. It looks like they closed June 50s later in the day. And they might have and those calls probably they lost money on. So they're probably just pushing it out to November for more time. November 50s, right here. Yeah. So, yeah, not clean action. Not clean action. That was the other action today. CoreWeave. Now, that's more my speed. I mean, I've traded the name a couple times, but I didn't catch this big move here. Not even close. So CoreWeave, I traded twice. I traded in the correction. I day traded it both times. Both times. In the correction, it caught a couple small sweeps, and then it got bombed recently. You want to talk about action? They bombed it. Look at this. But of course, I sold it and took my money and ran. Okay, look at this. This has been going on for a good 2 weeks now. This is June 13th, 100ths. This is nothing yet. I could keep going back here. Familiar repeat name, CoreWeave. Look, so is this recently? Oh, this is a couple days ago. So QBTS, they were buying for the last 3 days. Look, like I'm only going back a couple days here and look at all the action here. Oh, wait, I went too far back. What's the date on here? May 16th? Oh, here it is, right? Yeah, this is it. Why is this not in chronological order here? I don't know. May 16th. June 2100s. No, it's not going back far enough. I don't know. Anyway, CoreWeave, they tattooed it. They tattooed it. A lot of buying in it. But now look up here. Okay. So again, this is what I like, right? These are the names I like. These are the type of names for this reason. Okay. You get an institution sniffs around and wants to put on exposure in this name. You get a chase going. This is what happens. No sellers. Bing, 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 bing. So they're not all going to do this, but if you like the name, you like the sector it's in, you like the fundamentals. For me, if I like the sweeper activity, looks good. These things, when they get going, there's not a lot of supply. Not a lot of supply. I'm never in them for these moves. You guys would be proud of me though. I still have RBRK Sahil. You still have RBRK Sahil? Oh, he just made man that RBRK is a beast and no one ever talks about him. And then, yeah, exactly. Exactly. I didn't see you writing about it, Sahil, the RBRK. I was just talking about it. But yeah, see, I mean, it's a beautiful thing. Beautiful thing. And this is, and like I was talking about the ideal scenario coming out of this correction, okay? Think about a market that, let's say, digests and chops around here, right? Even as range bound, okay? This is the type of setup you get. You get names that look like this, right? So they're range bound, but if there's accumulation, go look at accumulation coming as far as flow coming in with time, let's say, and you like the name, you can build a position here. And then when the market breaks, right, or even the stock breaks, you have some exposure, right? These V-shaped rallies into a melt up, you can't get your hands on much without chasing. But yeah, this RBRK, you know, it, one of these few type of names. One of the few type of names. And this one too. This one too. I just think you had the problem with this. It was good and bad. You had Pelosi news, so now you got the whole riffraff involved. You understand? RBRK, to Sahil's point, nobody. You don't hear a peep about it. Nobody even knows about it. That's a beautiful thing, right? That's like Shark Ninja. Remember Shark Ninja? Yeah, that's like that. Smooth sailing. But TEM, same thing. I'm still holding my TEM. I'm still holding my TEM. Now, we bought it here, and I didn't sell this pop, but I don't have a lot of it. It's easy. It's easy when you don't have a lot of it. It's easy to say, "Oh, I'm still holding." If you're holding a decent sized position, it's completely different. BBAI trying to take this. Yeah. This has been seeing some flow too. This is an oldie too, oldie but goodie. I tried to day trade it today. I didn't make shit. BBAI, but I like the spot, Tobias. I like the spot. The spot here, if you like the name, is worth a shot. You know, it's worth a shot. Again, this is a name that every time the spec names are seeing action, BBAI is catching action. Here's another one. You want a name that literally the buying in it is insane, for that name. Okay? Put sellers, call sweepers, nonstop. Nonstop. All right? Now, you're talking about from here. All right? I think Sahil was in this. Struck might have been in this. A lot of people in the steam room were in this with me. Okay? RKLB, the first round of decent looking sweeper activity was right here. Okay? You see this circle? That's where I sold it 2 days later. Okay? I bought it here. I sold it here. And since then, literally, since then, it's been non-stop bull flow. Okay? Non-stop. So that's what I'm saying. There are a lot of names like this. All right? We talked about the nuclear names, the quantum names. Like, I don't even know what these guys do. What do they do? Spaceships, right? Or some shit. So you got like all these recycled speculative type names that they keep buying. Okay? Now, again, I don't know much about this name, but they started buying back here. Okay? And I'm not seeing any crazy growth or anything like that. Now, maybe something's in the works for a couple of years out or some shit. But, to me, this is still just a speculative name that, they love to buy. But you're talking about a lot of buying in this thing. And real buying. I'm talking about real buying. Unlike some of the other. Like, here's a space stock, right? They don't play this as much. You'll see speculative flow here and there. This one, we don't even see any flow in this one anymore. ASTS, this had a real nice run. But this RKLB boy, I don't know what they like about it. They love this thing. They love it. Rocket later skyrocketed after Trump. It's legit. Okay, like what's the definition of here legit? I'm not saying they're going out of business, but what price? Where is there like what multiple is this trading at? There's no multiple. They're not even close to making money. And that's kind of like if the speculation is not around in this market, these stocks go dead. They go dead. Sahil. They go completely dead. You go through like 2022. Remember when fundamentals mattered, right? These stocks, they're not going to see any buying. They're not going to see any buying. So that's kind of the problem with them. Again, trading them is fine. I'm talking about like new bull market leaders. It's tough to make the argument. Yeah, I get it, but that's exactly why. Sahil, you got a stock that was at $2. It's at 30. You understand? Like it already went from $2 to 30. What's priced in of what you're saying is good that then takes time? I'm not saying, kind of like the PLTR, right? Here's what I'm getting at. Okay? PLTR, you heard basically the same shit about it. And it's the exception because the most of them, you'll never see them come back. Like, right? A lot of them you don't see come back. PLTR was the exception. You had a story there that people said over time you would benefit from. But like look at what you had to go through in PLTR. 1 year, 2 years, 3 years of dead money. 3 years of dead money. If I told you something was going to go dead for 3 years, you wouldn't buy one share. Who are you kidding? Come on now. Yeah, that's my point. That's my point, Sahil. That's my point. That's the point I'm making, And honestly, I'm not saying I know. Like RKLB catches real action. As far as I know, this thing could be the best thing since sliced bread. I have no idea. But I'm just saying, like, a lot of these names, they all look the same fundamentally. They all look the same fundamentally. And everybody likes a different one of them, right? Some people like RGTI. Some people like OCLO. Some people like RKLB, right? And each one they're a fan of, they're saying, oh, no, this is going to be real. Oh, no, this is going to be real. They're not all going to be real. I can tell you that, right? They're not all going to be real. Yeah, but again, you're talking about a different animal. You're talking about a different animal, Tesla. You're talking about a different animal. And even back then, right? You think about the pain. There was some pain in Tesla back then. Real pain. Real pain. I'm not talking about of recent. Look at here. Tesla for 2 years, dead money. All right? Then you had a rip. And then Tesla, 2014, 2015, 2016, 4 years, dead money. Look at this. Wow. So in 2014, you would have bought Tesla $18, $19. In 2019, it was $20. Right? But you gotta understand, right? You look at that and you're like, you sit for. Think of how much the opportunity cost. Right? Think of the stuff you could have made money in over those 4 years instead of sitting in dead money. That's kind of the argument I'm making, right? Like if you like RKLB and you have a gut feeling or you're from the market guys about it, it's fine. You take a shot, you buy a little RKLB or you traded it, let the profits pay for a piece, forget it, leave it alone. But you can't make a habit of buying all these things and sitting in them and waiting for them to hatch. Because the majority of them don't hatch, especially zero revenue businesses. Right? Example. Here's an example. Okay? If I had $1 for everybody that told me this thing was going to be the biggest thing in the world. No, I got a better one. Rivian. Okay. You know how many people? You know how many people tucked away Rivian in 2020? You know how many EVs? Okay, and EVs, you saw it. It wasn't even quantum like guys like me. I don't. You could throw a quantum computer in front of me. I couldn't tell that different from a Commodore 64, right? But EVs, it looked like they were putting stations over here. Tesla was getting popular. The new Hummer came out in EV. I couldn't even buy a Hummer with gas. It were. It looked like EVs were here already, right? And you had all these car company battery plays, all these things. And I remember then the same shit. Everybody used to tell me, "No, this is for real. No, this name is real. I'm telling you, it's real. Rivian's real. Amazon owns a piece of them." You know, it's you never know with these things. You never know. You never know. Like they were bleeding money even back then. What are they doing now, Rivian? I don't even know. Is Rivian still around? Oh, I'm thinking of Nikola. Nikola is still around. Neo. All these, you never know. Nobody. It's impossible. They're speculative for a reason. I know. I know. I know. I know. Either is TEM. Either is TEM. Either is a lot of this market. There's just not. See, Hill, there's not a lot outside of large cap that's not only profitable but has any growth. That's kind of the problem we have. Rivian is almost profitable. Well, what the hell is it still doing down here? And they look at it. I mean, they do business, right? But it was all hype. It's all hype. It's all hype. Again, I'm just making a point that there's a lot of luck in it. A lot of luck in it. In kind of these. I mean, they're speculative plays. They're speculative plays. When liquidity, when there's an influx of liquidity, right? And like we're looking at liquidity charts and they're at new highs and Bitcoin's at new highs. These spec names, nobody cares about fundamentals, right? They have a bid. When that goes away, these things become bidless. They become bidless. And now, luckily, we have some liquidity in the backdrop, but there's going to be a period where liquidity is going to be a problem, and these things go bidless. It's tough to sit through that period with heavy investments in these names. Flyer's fine, right? And you know what I'm talking about. So, I'm not saying that you're saying the opposite. I'm having a conversation with everybody here. I'm not saying you. We've had this conversation, you and I, before, Sahil. But when you get into a tougher time, these stocks, they go bidless because they got no fund. They have no fundamentals. They have. How do you price them? How do you price a stock that has zero revenue and bleeding? It's priced in pennies, and that's where they start from. Now there'll be the one exception that ends up, they're going to have crazy revenue growth and eventually go to profitability, like an Amazon. Do you know like what you have to sit through in Amazon to get through the tough time? Oh my God. No way you would have done it with a decent size position. No effing way. No way. No way. And think of Amazon, what they did. They went from selling books, right, to a completely different business. Completely different business. it's just a whole different can of worms, man. You know, I guess the point I'm making is you ride the wave when it's hot. You know, you try to take advantage of it when it's hot. But you can't fall in love with all of them. Right? You pick one or two you want to leave a little piece of longer term, and you want to sit through pain with and stuff like that. You know, you can do that. You can get away with that. But I think the problem, what I'm getting at, and to the points that Heel's making, even the stocks that we're considering like better quality, they're not even profitable yet. You know what I mean? And they're like, they went through the legit stages of going public and all. Um, so I guess that's the point out of all this. Yeah, that's the way to do it, Sahil. You take little pieces and you give a long leash to, you're willing, you don't get too excited, those shorter term profits, and you don't mind, when you give them up. You don't mind when you give up the profits, right? Because you're kind of looking for more. I kind of took that approach with Soon, but what made it easier is that I had a nice profitable trade on it that kind of gave me the cushion. But like, look what I had to sit through and assume, right? So I bought it here. This was the initial trade, okay, in Soon, and I sold it here, okay. But I left 3,500 shares behind, okay. I had 35,000 shares of Soon for the trade. Sold it. I left 3,500 shares of Soon, okay, and I held it. This rip, I didn't sell it. It gave it all back and then some, back to basically my cost, right? Here, caught some more flow, had another run to 10. I didn't sell it. Think about that. Had another run here to 10. I didn't sell it. Okay, now again, only 3,500 shares, not 35,000 anymore, right? Then gave that back and chopped around for a good 9 months and then went to 24. And then I sold it. You know? And who knows? Maybe in 3 months it goes to 50. I have no idea. But look at like what I had to sit through. Giving back basically the whole run each time. Yeah, that you find companies you like and you leave some behind. Even more so, I think, if you traded the name and you made some money in the name, you leave some equity behind. It's nothing, right? I think that's the smarter approach. I agree 100%, Sahil. I agree 100%. And you see, like, kind of what I referenced to what I'm doing now. When I ran a book of clients, I did that for clients. And believe it or not, at the start, like if you truly have conviction, you're at the start of a bull market. That style, kind of what I explained to you, where each trade, when you make money, leave some equity behind. You have to see, like, then it was the post 2000 bubble, and you guys remember me telling you the story. There was a birth small mid cap bull market like you never seen before. Every time I had a trade and made money with it, I left a piece of that position, a small piece behind. And then, 2 years, 3 years into it, I had like 50 different stocks that I left free stock for, basically, right? Because the profits paid for it. But so I don't think you do it to that extreme. What I think you do is kind of to Sahil's point. If you really like the name, right? So if it's a name or a sector you truly believe in longer term, you should do it with that. You should do it with that. But where that really pays dividends is when you think you're at the start of a new bull market, like you're coming out of a bear market of length, and you feel like you have a multi-year run in you, and you start leaving little pieces of equity behind. You could see how that could add up. And God forbid you step on, an Nvidia or a PLTR or anything like that. That's where it really starts to have an impact. Yeah. See, that's great, Raul. That's great. Like and you're doing it real from options to equity. You know what I mean? Or you can even do it vice versa too, if you want. I think Ranchero talks about it. Let's say you played the equity or options, and then you could buy some leaps, with a piece of the profits. So there's a variety of ways you can do it. But I would just recommend probably, sticking to the names, you kind of to Sahil's point, that you really believe in longer term. And, if you believe you're at the early stages of a new bull market rather than later stages, that's something to take into account too. Yeah. That's what you got to be careful about. Sahil's saying chasing the junk. Listen, if you're tactically trading that stuff and it's just a losing trade, it's not the end of the world. But if you get caught with a basket, right? If you get caught with a bag of this garbage that has already run and has some air underneath it, that's where you get really lumped up, man. You could get really, really lumped up bad. Really lumped up bad. Because, when something cracks and liquidity kind of goes away, these things, again, they go bidless. And after these big runs, you got a lot of room to come in. One name, yeah, maybe you live through it. You have a basket of them. That's a hickey. That's a hickey from Kanicki right there. You know? So you got to be careful. And it's not easy because there's a lot of excitement. It's fun. These names move, right? Especially for us equity players, you can buy a decent amount of them. They're right. They're not $1,000 a share like an Avgo. So you can really get reeled in. You got to be careful. I forgot. I saw Struck mention the PCT earlier, and I forgot to pull it up. Yeah, this thing's been moving a little bit, right? This is the Druckenmiller play. Again, this was a nice spot down here, risk reward wise, and has had a nice little creep up here. PCT. This is Druckenmiller is rolling the dice on some of this. This might be his spec play here. Oh wow, I didn't know that, Raul, about you. That's an awesome strategy, bro. That's an awesome strategy. I didn't know that. Yep. So you're saying that basically any sweeper activity that he likes, he tails in. If he likes the companies, if the fundamentals are there, he leaves a piece, or he buys a little equity with the profits if he makes. Yeah, I'm telling you, it's a solid strategy. A solid strategy. And it adds up. Because again, I think at the start of a bull market, you really see the benefits of it more so. But, you turn back, all of a sudden, let's say you got 10, 12, 15 companies that you made money with and you left over the years, you left the stock behind where you bought a little stock in. You don't need all of them to work out, right? If 10, 11 of those stocks did nothing and you had 4 really nice winners, it adds up. It adds up. A lot of shorts and PCT, so things you could squeeze. Interesting. Yep. I think a lot of these things, right, Struck? Just a lot of these names, I think that's kind of what you're seeing, the excitement, and more so in the flow and the stuff that's catching flow. I think you had a lot of funds caught short. Like a lot of the fund money out there, what they were doing is they were buying kind of the quality, right? So they were buying the Costco's of the world, the Apples of the world, all that, the Nvidias of the world, and they were shorting this stuff, So what happens is when you get this kind of snapback rally and they get caught short, you see this kind of snowball action off the squeeze. And again, that's where we've seen look at this. You see this? Like you see the squeezes in this thing? Because this thing was like the most heavily shorted stock on the board. Look where this thing is, Carvana, right now. It's unbelievable. This thing is $300. Like this thing, here's an example, Sahil, of one going real, huh? From bankruptcy to, you see where their numbers now? I can't believe this. I can't believe this. This thing was literally weeks away from bankruptcy. Do you realize this, Carvana? Look at this. How do I get this on my screen now? Oh, that's not it. There we go. Look at this. What was the low on this? $3? Unbelievable. Oh yeah, Chambers, they got lit up. I'm telling you, I remember this thing, the off the squeeze initially, like here, it was still the most heavily shorted stock on the board. Like they've been annihilated in this thing. And there were rumors, Sahil, that they were going bankrupt. They were getting ready to go bankrupt. But these numbers are real. Like you see the numbers. Look at this. $4 billion for the quarter. They did $4 billion in revenue for the quarter, Carvana, and earned $1.59 a share. Come on, that's insane. Completely insane. Nuts. They got our lifelines right. What else? Anything else out here? I'm looking through some of the chat now because I can't keep up here. Yeah, the plug. I remember plug. That was hyped up. There was the battery and EV names. That was as much hype as you're going to see in a group. Crazy hype. Crazy hype. All right, guys. I'm going to wrap it up now anyway. Always a pleasure talking shop with you guys on a Thursday. All right. I can't believe we got a long weekend too, right? Monday off. So we'll see how quiet it is tomorrow, but we should see some of these more speculative names see action and volume. So hopefully, there's some things to at least play even intraday here. Stavro, have a good night, everybody. Enjoy the rest of your Thursday night. And I will see you, Steam Room members, mañana. All right. Take care, everybody.